Hi everyone, today I'm talking about Facebook stock and that I bought Facebook stock. I bought Facebook stock on Wednesday, and as always guys, give the video a like. It really helps the channel out, it helps the video out about how much it gets out there on the YouTube community. But we'll get stuck into why I bought Facebook stock. So I bought on Wednesday at $188.78, and it's a company that I'd been looking at for a while, and it kind of just got below the 190 mark, and I've always said Facebook below $190 is an absolute steal. At the moment, Facebook is one of my top 3 positions. It's one of my 3 favourite companies out there in the stock market. Microsoft and Visa are the other 2, and Facebook is the 3rd. I wouldn't mind Facebook being my biggest position in my portfolio, although it does have a little bit of a way to catch up with Microsoft. I will be buying a bit more shares in Microsoft on Monday as well. It's just a little bit behind again. But overall, I love Facebook. It's, in my opinion, one of the most undervalued companies out there in the stock market. I felt like before the CV outbreak as well, it was massively undervalued. And now as well, because of the decline as well, and now it's back under 190, I think it's even more undervalued right now. When I kind of got into Facebook, my kind of like long-term thing is that I normally hold stocks for 2 to 5 years. I look at Facebook as well, and we'll talk about why it's undervalued in a little bit, but price target wise, when I got into this company, I see this stock in 2 to 5 years being a $300 stock, which means there's quite a bit of upside in this company already. And even before the CV outbreak, I thought Facebook should be a $250 stock, and this year finishing at a $300 stock. So when we talk 2 to 5 years, it's probably even going to be more than what it should be than a $300 stock overall. Now, one reason I love Facebook is because of the balance sheet. It is one of the best balance sheets you'll see out there. It's something like 25 billion cash they're sitting on. Now, they have started to use buybacks with this cash. I think long term we could be looking at a dividend from Facebook. If they don't use a dividend and they just carry on buybacks, I'm sure that'll be fine, because they'll just kind of up them buybacks that they do use. And with the stock being at these sort of prices, it might be tempting them to start using a bit more cash for the buyback. As well as the potential for the buyback, the dividend, I also think they could go and buy a company out. They do like buying a couple of companies out. We've seen in the past with like Instagram, WhatsApp. Buying the companies out is something that Facebook are willing to do. At the moment, I think Pinterest is one that's staring them out as a good buy. If they don't go buy Pinterest, I'm sure there's other companies they are looking at. But they probably will do something with that cash, because they have started to be a little bit more aggressive with that cash pile, which is great to see. And that also goes back to management, which I also think have done a fantastic job over the last, especially the 2 years, how they're tackling like a lot of privacy issues. Sure, they're getting a lot of fines right now, but they've kind of admitted, like, look, we've been a little bit slack since we kind of started, and we're going to tighten this up a little bit. They've invested a lot of more money into managing the privacy of a lot of the customers, which is fantastic. And I think management have really upped the game over the last 2 years for Facebook. Now, obviously, Facebook online platform, it's a really easy profit maker. They have fantastic profit margins as well. This has led to EPS and revenue exploding absolutely huge. EPS is it's flatlined a little bit because they've had a couple of fines. They also get quite a few heavy fines because of the amount of cash they have. The EPS is still going to explode. I think next year it's going to massively recover from where it was. Revenue always grows at a really nice high rate because of the ad revenue growing up absolutely huge. And looking forward for the next 2 to 5 years, I only see the amount of ad per revenue going up, especially when they start monetizing some of the platforms they do have. So the revenue and EPS is pretty safe going forward, and I'm sure as well, if there's the potential for a buyout of another company, that'll only help the EPS and revenue going forward. And when we look at Facebook and what you get with this, we have a fantastic moat. We have a fantastic amount of companies that they own. They don't just rely on Facebook. They have the Messenger app as well. They have WhatsApp, they have Instagram, and those kind of free apps are not as monetized as what Facebook is going forward. So if the monetization of them apps carry on increasing like Facebook, that'll only help what they do going forward with the amount of revenue. Now, obviously, all this revenue comes from adverts, and when I think about adverts, I see them more going to online platforms and your TV kind of platforms, because they're so easy to miss. You could skip channels, you go out the room, you come back in for when your TV show starts. A lot of programs now you can just totally skip the adverts altogether, whereas on social media platforms it's really hard to avoid them. Sometimes you have to actually watch them and you can't skip them, which is a lot more effective. They also have links to their social media page, so companies that advertise have a little bit of ability to get customers from the adverts to retain them, which they like as well. So the adverts for me is only going to carry on growing, and the amount that they can charge for them adverts going forward. And also when we think about, why is this stock down, the CV outbreak, how is it going to totally hurt Facebook? Sure, companies will be affected, and the spending budget might be cut, but there's a lot of online companies that will still be doing fine through the CV advert. And Facebook itself, if people are off work, what they're going to do, they're going to be probably streaming programs on Netflix, they're probably going to be on Instagram, Facebook, WhatsApp. A lot of these people that are going to be off work are probably still going to use Facebook, so the users aren't going to drop. That means also that people are still going to be seeing the adverts, and e-commerce sites as well. People are going to be on e-commerce sites probably ordering things because they're a bit bored or they want something to do. So with that, a lot of e-commerce companies the majority of companies that do use Facebook and Instagram for adverts, a lot of online companies, they're still going to be using adverts, and I don't think it will hurt Facebook that much compared to other companies, especially like, your CCLs, your Disney stocks. So I think it's a pretty safe stock as well over the next kind of year with the CV situation. So anything under $190, I'm happy to get into Facebook. And like I said, I bought some more, and I don't mind buying this company again and extending that position. If I was to extend it, I would hopefully want to get in below $180 this time. So something in the $170 range would be really cool if I could get in there. I'll probably wait a couple of weeks and see if that does happen, because I think there is potential for the stock market to go a little bit lower. But overall, I'm happy with this position right now. I wanted to add into it because I kind of felt like when it was back at these prices about 3 months ago, I should have bought then. So I'm happy to finally get in now. I'll add to the position, should I say. And like I say, hopefully I can add a few more shares. Hopefully in the $170 range is where I'd be looking at next. But that's me talking about Facebook stock, guys. I hope you enjoyed the video. As always, give it a like, subscribe if you haven't. I'll see you in the next video.